This is Ron Costa broadcasting live in the Mappable USA studios where we put you on the map. And folks, today we're going to be talking about some more alternative type investments. Maybe, we talked about on one of our podcasts before about some investments that fly under the radar. And maybe this is one that people may not be really aware of at this point. But we thought we'd bring it to you because we really like what's going on here. There's a lot of opportunity here. So speaking of opportunity, let's bring in Vicki Hutchmala from the Opportunity Zones Authority and the QOZ Marketplace. Vicki, how are you doing today?
I'm excellent today, Ron. Fabulous day in Las Vegas. Couldn't be better, although it would be nice if the casinos and everything were open, but that's another story. Today we have a special guest, and we're going to talk about farming and what an exciting investment that is. So can't wait.
Yeah, well, listen, with the casinos closed, you can't throw your money at the casinos. You might as well invest it in something different. So let's bring on Artem Milinchuk from the Farm Together. He's the CEO and founder. Artem, how are you today?
I'm well, thank you. I'm in San Francisco. It's definitely getting a little warmer, a little sunnier. You cannot promise that farmland will be as exciting as casino. It's boring and safe, but definitely excited to talk about it.
Sometimes boring and safe is good, Artem. Boring and safe is good.
Yeah, I think it's nice to have different parts of your life. And, the casinos will be for the exciting part. And then for your retirement portfolio, farmland is the way to go.
There you go.
Yeah, it sounds that way. And actually, for a gambling perspective, you're not even that far from Reno, are you? I guess that's where you would go for the people who live in San Francisco, right? It's pretty close.
We're fairly close.
Yeah.
And, the annual pilgrimage of San Francisco to Burning Man goes through Reno and Las Vegas. Although this year
there you go.
So, yeah.
Oh, there's a lot of farmland there, too, it looks like. There's a lot of stuff that's undeveloped out there. But anyway, let's get into this a little bit because I'm interested in seeing what you guys have going on. But before we start that, let's talk about yourself a little bit. Can you tell our audience a little bit about your background, how you got into this whole farming concept to begin with?
Yeah, absolutely. So as your listeners can judge by my name, maybe I was born and raised in Soviet Union and Russia. In the late 80s and really most of Soviet Union's history in the sort of second part of 20th century, we're very constrained by communism and deficits. So everyone had this little subsistence plots called dachas, and everyone would get a little bit of land where they would grow food, and it wasn't for it would be a more contemporary kind of hipster garden, but really to survive. So you grew things like potatoes, you grew things like tomatoes, and every summer since I was, I think, 5 or 6, my parents would take me to my grandparents, and I would work on those little lots and really had to learn it the hard way where food comes from. So definitely, I think that's where the initial sort of connection came to farmland, and it's always been something that in this world of everything changing, of tech and finance and bubbles, it's something that is as real as it gets, something that you can always rely on, something that you can build your life and career around, and your investment around. And so my mature years were spent in finance. I have 10 years of experience in investing. I moved from Russia to Canada in 2007 and spent 10 years there. And I was working for pension funds, working for private funds, and always with a focus on food and ag. And so really it's kind of marrying the passion for food and agriculture with the promise of properly managed finance and economics. The key word here is properly. To really unlock this asset class. And so I moved in 2016 to San Francisco, to California, where actually a lot of people may know this, some may not, but almost half of our fruits and vegetables are actually grown in California, as well as 80% of global nut production and almond production is done in California. So it's a huge agricultural powerhouse. And so I've been here for 4 years now. It's been great.
Wow, you went from cold Soviet Union to cold Canada to beautiful San Francisco. So you ended up in the right place.
Yeah, I think it's that I don't like hockey, so they kicked me out from Russia and Canada. So.
Yeah, it's funny you mentioned the food growing there. I know the pistachio farms are huge in California too, isn't it?
Indeed, yes.
Yeah, that's a great crop as well. So so now you're in California, and you decided to start this company based on your knowledge, et cetera. And what gave you the impetus to do that? Did you see like maybe perhaps the Jobs Act and understanding crowdfunding world a little bit better?
So that definitely was part of the reason. Just seeing the overall trend of democratization of investing and new asset classes opening up. And it's funny that we call Farmland alternative asset class because it's really the oldest asset class. Before there was anything, there was agriculture. So really everything else is alternative compared to farmland. But part of it was the Jobs Act. Part of it was that some of my friends in tech were looking to diversify as much as possible away from tech, and farmland was something that actually fit that criteria really well. But when I started looking for those types of options for the tech investors, there were just very few, options really. And it was fascinating because you could, at that point in 2016, invest, into Bitcoin and racing horses and whatnot. But you couldn't invest except for a few options into farmland. And it just made no sense because it's such a critical asset, such a critical industry. So this is where I started getting really interested in that. And then lastly, even for large institutions, so at the time I was working for Ontario Teachers Pension Plan, which is a huge $200 billion pension fund in Canada. And even they were just starting that farmland investing, and it just made so much sense for them. Pension funds these days, they really look for long-dated assets that correlate with inflation, that can provide that real asset value. And teachers is at the forefront typically of pension fund investing. So it was just seeing how attractive this asset class, this investment is really for everyone that kind of gave me that final jolt to extra pension world and strike it out on my own.
Very nice.
Yeah, that's
what
an interesting story.
When you say in farmland, are there certain types of farms that you invest in or certain areas where you invest? How do you decide?
Yes. So when we talk about farmland, that's really important. It's important to first kind of separate them a bit more just to make sure we are talking about the right thing. So within farmland, you broadly have cropland, and that's growing, crops. And then you have pasture land, which is actually a huge market. Depending on how you count it, about $800 billion in the United States alone, and the total farmland market in the U.S. is about $2.5 trillion. So we focus primarily on cropland, and within that space, we focus most on what's called permanent crops. So this is your tree nuts, your almonds, your pistachios, your fruits, as well as we also, as secondary but still a core part of what we do, is row crops. So this is your corn, soybean, wheat, and they're called row crops because you plant them annually. You plant them sort of in rows, whereas you plant trees in rows as well. But in permanent crops, you don't have to replant every year. And so it's a different kind of risk-reward profile, different type of farm.
Do you invest in vineyards?
We look at vineyards occasionally, but vineyards are such an emotional investment, and there is part to it that is tourism, part to it that is the whatever grape is in fashion, whether it has a celebrity attached to it. So it's also very much a brand. And so we tend to stay away from vineyards because it's just a more idiosyncratic type of investment.
And it's more like a family, generational kind of thing because it takes a while to plant a grape and get a bottle of wine that you can sell for a lot of money.
Indeed. And actually most of farmland, almost 98% of it is owned by families either way. So most of farming, despite what sometimes you might think, is family businesses. Sometimes it's larger businesses, but it's still most of it is families. So it is very much a family affair. And wine grapes take a long time to get it to that premium level, both on the brand and the wine itself. But really on on some other types of crops like pecans, for example, that they take 8 to 10 years to reach full maturity. So farming and farmland is definitely a patient business, but once you kind of get it up and running, it's hard to sort of suddenly grow another pecan tree from scratch in less than 8-10 years. So it's also a defensible business once you get a good farm going.
So who invests in farms?
So
what kind of investor do you have?
It's really honestly everyone, and it's still a largely still unknown asset class, but that's changing. And so on our platform, we have everyone. We have farmers. We have people that are somehow connected to farmland and to ag. We have tech people, finance people. We have retirees. We have your doctors and lawyers. We're increasingly starting to see investment advisors kind of looking at farmland for the investors. So it's everyone. A bit of a maybe cheesy tagline we have within Farm Together is that we want every American to own a piece of America. And so that's kind of what we're seeing and what we're working towards.
Well, there's nothing better than being connected to the earth and to food. Food is an absolute.
Indeed, yeah. And Vicky, water as well. And oftentimes when you're investing in farmland, in an indirect way, you're investing into water, especially in places like California or Nevada, for that matter.
Well, right, because nothing will grow without the water. Good water and good access to good water.
Exactly.
Yeah, and Artem, when I go to your website over at farmtogether.com, I see a number of projects and listings there. Or are those projects that you guys own yourselves, or are you JVing out with other farmers, or is this just a portal for farmland type deals?
Yes, so good question. The way kind of Farm Together works, the way our portal works is that typically what happens is that a farmer is selling land, and most of the times it's because the farmer is retiring. The average age of farmer in the United States is approaching 60, and so a lot of farmers are retiring, and oftentimes kids don't want to farm. And so the farmer is looking for someone to be a good steward of the land. They're looking to sell it also at a price that reflects, the hard work they put in over decades and oftentimes generations. But at the same time, you're also looking for someone to operate it. And what's important to note is that actually about 40% of farmland today is rented. So it's a very common practice, and it gives the landlord the income and farmers flexibility and better use of the capital and operations. So the way Farm Together works is that we will typically buy a farm, we'll put it into a separate Delaware LLC, so it'll be a single property LLC, and then we will contract with a local farmer, an operator, on a crop revenue share or profit share or just a cash lease for long term or for short term. So what you see in the platform is essentially a single property that is kind of managed by Farm Together, but really it's operated by a trusted local farmer. And we have relationships with farming families that go back in decades and generations that are experienced, that are well off financially. They have the balance sheet and the capability and the capacity to really farm. And for these types of businesses, for these types of families, the attraction to them is that they get to spread the equipment, the knowledge, the workers over larger and larger acreage that's capturing economies of scale, while at the same time not tying up their capital in what often is multi-million-dollar properties. So it's kind of a win-win for everyone. And yes, on the platform you see the deals that Farm Together has done before, and then the current live deals. And we constantly increasing the number of opportunities we bring to the platform. So right now I think it's one deal. Hopefully soon it'll be 2 deals at the same time, 3 deals, and so on.
Yeah,
so
we
how many
recently
investments do you have?
So right now we have, let's see, so there's some farms that are actually not shown on the platform, and we don't disclose the exact amount, but it's a kind of it's in the approaching high single digits.
Oh, yeah. Okay.
We recently did a podcast about group homes, And group homes has a business component and a real estate component to it as well. It sounds like this is something similar too, because there's a business and there's a real estate component to it. How do you differentiate between the two on the investment? Are you buying into the real estate? Are you buying into the business? Or are you buying into both?
Yeah, that's a great question, and you're buying into real estate. So when we say farmland as an asset class, when we talk about farmland, it really is you owning the land, and a lot of the value comes from owning the asset. And farmland is inherently, especially with good soil, productive. So unlike an operating business where you need to rely fully on the operator and you participate in the profits, this is definitely more of a real estate play, where you generate income from renting out the land. And again, it can be more of a straight-up cash lease that is a fixed amount, or more of a crop revenue share. And crop revenue share will be higher risk, fixed lease will be lower risk. But yes, it's a much more real estate play than an operating business play.
Okay, and then I know you have farms all over the country. Where do you get these opportunities? Do you search out specific farms? How do farmers reach you, and how do you know, or I guess what's the vetting process to know that a farm is going to be profitable?
Yeah, it's several questions, so I'll kind of go through them one by one. The way we find farms is that, first of all, we start with a global macro view, and we really think about things like climate, pricing, things like trade wars. So we look at that. We then think about which crops we like best long-term, which crops have long-term tailwinds. For example, almonds have very strong fundamentals. Consumption is growing. Dairy is more so struggling right now. So we might not do as much in dairy. So from there, we look at what are the regions that are really have a very deep ecosystems as well. So again, California is very strong in almonds. It's important that there is many operators, there's many properties, there's a developed ecosystem around the local almond industry. So we'll look at that as well. So then after that, we apply a checklist that is almost 100 plus different data points and different types of questions that we ask to filter through every property. And we use increasingly technology to speed that up, to also do a better job there, to do a high quality job so that there's less of room for human error, to then select properties that fit those types of criteria. So from there, once we sort of find those deals, we will enter negotiation with the sellers. Sometimes, we will not reach a price that we'd like, so we would walk away. And then when we reach the price that we like, we enter into due diligence period, during which we really dive deep, literally, into things like soil, water, leaf, tissue, local title, local labor market. So all the things that go into making sure that this is a high-quality, productive land. And then from there, we put the deal on the platform. So really, I would say it's maybe 1-2% of deals we look at make it to the platform. It's a very small amount.
I believe it.
And then after that, there's a lot of farmland that is becoming available. USDA and other experts anticipate that about 70% of farmland is going to change hands in the next 20 years, so which is roughly 90 to 100 billion a year. So it's really important that us and the industry in general can be good stewards of that land, and that land doesn't disappear, because one thing that's happening in the U.S. is that about 15 million acres have disappeared in farmland from 2012 to 2017, which is almost twice the state of Massachusetts or West Virginia. So definitely a decreasing supply of farmland, and it is important that we act as responsible stewards of this very important, not just asset, but a way of life and something that is important for food security and for well-being of the nation. So definitely a strong sort of stewardship aspect that we have to apply to farmland as well.
So do you think that farmland is disappearing because newer generations just don't want to be farmers and they just let the land go, or they sell it for different use?
Yes, unfortunately, that's part of it. It's that. It's urbanization, and it's also climate change and competing uses for water. So that is all leading to decreasing supply of farmland.
that makes it very important to make sure that you have the right analyticals so that when you select a farm or you partner with a farmer, that you have done all of your due diligence, you have all of the analytical information to make sure that it's a sound investment into the future and your investors can rely upon it.
Yeah, Vicki, absolutely. So, one point on also how do we find good deals. So the thing is that our team and our advisors and expert board combined have about 70 years of farmland and ag investing experience. So there's also a lot of relationships we have built over the years where farmers know us, the local kind of lawyers, accountants know us, and so we also get to see a lot of deals that never even make it to the market. Anecdotally, what kind of the farmland market is that about half of all deals actually never make it to sort of the public listing sites and the brokers. Now, I'm not sure how exactly correct it is. Anecdotally, directionally, it seems right. And so it's also important to build relationships with, the farmers and the communities that we're in to be able to actually participate in the deals that may be a little bit more complex. Maybe there's some additional bells and whistles attached to, for example, sometimes it'll be 3 siblings. Somehow it's always 3 siblings that inherit the land, and 2 don't want to farm, 1 wants to farm. So how do you ensure that transition?
Yeah.
Sometimes the farming families or the sellers have relationships with, the local farmhand, the local fertilizer supplier, and they want us to continue in that relationship, and that's really important to them. So
right.
There's a lot that goes into it, and it's not just price that matters oftentimes.
It seems to be farmland seems to be more of a emotional type of investment because you have so many ancillary situations besides just the specific land and the specific farm and the specific crop. It involves a lot of other things that are ancillary to it that you also need to maintain.
Yes, and what happens sometimes that while kids that inherit the land don't want to be farmers, but they do have that emotional attachment, and it's oftentimes a farm that goes back generations. But at the same time, they still want or need income, and so in those cases, what we also do is something like a sale and then repurchase in a certain time period, 7, 10, 15 years, or we do just a long-term lease, at the end of which we kind of return the land into the use of the owner. So there's a lot of different things you can do with the owners of land to still maintain that emotional connection. Absolutely.
That's great. That's good.
Yeah, it is good. And Artem, now when you put a deal on your platform, then when I go to that website today and I see this platform, it's been vetted out by you guys based on your experience and knowledge. So I should be pretty assured that this would be a pretty decent deal. However, if I'm looking at this from the eyes of an investor, we talked about this earlier, sometimes investors may be afraid of farmland because they're not familiar with it. Maybe they don't know how to value it. When they talk about regular real estate like multifamily or commercial, you have your cap rate, you have your rent roll, et cetera. Well, do you have to teach these investors, how you arrive at that, or why it's a good investment, or how do they understand something that they may not even know about how to evaluate that, something like that?
Yeah, Ron. So really good question, and I like how you draw the analogy to real estate because that is what we are kind of seeing as well in terms of where farmland falls, and see a lot of similarities with real estate. So, yeah, let me kind of go through this step by step. I like that you mentioned multifamily housing. So actually, when we look at farmland, we see it as the 3rd largest real estate asset class. So the behemoth in real estate is single-family housing, which is some insane number of trillions. I don't even count. The 2nd largest is multifamily housing, which is 2.9 trillion. And then the 3rd largest is farmland, which is 2.5 trillion. And I think it may overtake multifamily in the next 10 years. So we'll see how that progresses. When we look at farmland as an asset class, we look at what's called the NCREIF Farmland Index. And NCREIF actually has a number of real estate indexes as well. The NCREIF Farmland Index from 1992 to 2018 has on average actually returned about 10% annually in price appreciation and income. So it's done quite well. Now, I think it's done quite well. It's actually outperformed, I think, S&P. It outperformed most of real estate, bonds, gold, and almost a lot of other asset classes. Yeah, it's done quite well. Now, I have to caution you, just like with a lot of other asset classes, the stock market, if we were talking then of 2019, I don't think we should expect those returns going forward. I would guide investors towards high single digits as an asset class. So it has had good returns. Now, when we look at risk, and we think about risk in two ways, right? One is volatility. It's the sort of your more traditional volatility. You look at standard deviation from the mean over a number of years. You want to get mathematical. So the volatility of the Farmland index has been about 6-7%, which is much lower than stocks, much lower than public real estate, somewhat higher than bonds at about 4%, but overall quite quite stable. And when we look at the Sharpe ratio, meaning returns by divided by volatility, Farmland is about 1.2 on that, a little bit more, and outperforms every other major asset class that we looked at for that period. So it's done quite well. When we look at risk as well as maybe the ability to, I think, I'm trying to think. I think it was maybe not Warren Buffett, but definitely some of the iconic investors. They also talk about permanent loss of capital, which is, if I invest into this, is there a chance that over a 5-10 year period I will permanently lose all my capital? And same as with real estate, I would argue that it's really hard for farmland, especially over longer periods, to really have that permanent impairment of capital. Now, if you buy at an inflated price and you have debt, then that is a possibility. But overall, farmland, because of its inherent qualities, has been very resilient in that regard. So when we look at the Farmland index over that period, 1992 to 2018, it hasn't had a single negative year. So there was not a year when Farmland index actually lost value. And that is driven by some macro things. So growing population and improving diets with decreasing supply of farmland, and improving productivity of farmland every year since 1947. We've seen 3.2% annual improvement in yields, or around that. It's really, I think, a very strong case here to be made that farmland, at the very least, is not likely to lose you money. And I think that's really important when we think especially about long-term investing and generational investing. So when we think about cap rates, I would say that in farmland right now, we see cap rates that are in the 6 to 10% range. And they are definitely depending on, when you look at row crops, things like corn, those cap rates have been trending lower and lower. And for some excellent high-quality cornfields in places like Iowa, your cap rates can be as low as 2.8%, which is insane. But that is how it does, I believe, and please, guys, jump in here, but I do believe that it sort of approaches really high-quality multifamily housing in some prime areas.
Well, these days, if you can preserve your capital, that's not a bad thing as well. So that's another thing people look for regarding that. But okay, all right. Well, another question I had for you now is, okay, if I'm an investor and I'm interested in this and I'm looking to see some of those deals, how does it work on your website? Do I just go there and I sign up, I create an account, or I would imagine you're taking only accredited investors, right?
Yes, sir. So unfortunately for now, we can only take accredited investors. We're actively working to expand it to everyone. We'd like for that to happen next year, but it is a pretty significant kind of regulatory burden, and we want to make sure we always comply with SEC, of course. So something that we hope to roll out next year. So right now it is open for accredited investors, and when you go on the website, really it's you submit your documents to verify that you're accredited, and there's a third-party integration we have where you can do that as well. But once you do that, it's really in a matter of minutes that you can invest into Farmland, because it's an online process with online doc signature. You can fund it online. You can also link your IRA, so your self-accredited IRA, the retirement accounts, You can invest through an LLC, through a trust. So it's a number of different kind of ways and entities to which you can invest. And we definitely, our tech team has been working hard for the past 12 months to make it seamless. And right now, you asked me what type of investors we have, and we definitely have some IRAs and some RIAs as well.
Yeah, and your documentation is in the form of a PPM?
Yes, so it's a PPM. It's also a subscription agreement and an operating agreement.
Okay, that's cool. And again, they can invest in as many projects as they want, right? If they like 2 projects on there, they could do multiple investments, and they're separate, right? There would be separate ownership in those 2, right?
That's right. And we encourage, of course, for people to diversify and invest into multiple crops and multiple geographies.
So do you have a time frame of your investor that he has to stay in the investment for a period of time, or can he liquidate relatively easy?
Yes, a great question. And typically, Farmland is a longer-term investment, so it's not something that you should or want to be flipping. Our time horizons tend to be 7 to 10 years, and we're definitely seeing demand for longer-term investments from some of our clients. But we are working on rolling out a secondary liquidity option with the first pilot for the first deal that we've done going live in September of this year. So overall, we'd like to give our investors an opportunity to trade the unit in a secondary market at least every year. But really, we're working towards making that semi-annual and then quarterly and then monthly, and ideally real-time at some point, or at least once a year.
You guys should tokenize this entire investment, then you can give liquidity any time.
Exactly what I was thinking. You should tokenize it, and oh my God, then you could really have fun.
That's definitely once that part of the market is more developed, we would be looking to do it. But again, we really want to be very safe in terms of regulatory compliance, SEC compliance. And I think blockchain, while exciting, still has ways to go from that perspective, but we are closely looking at the developments in that space.
Oh, Artem, do we have the company that you need to talk to? They could set you up so quick and so easy and so secure, your head would spin. On the other hand...
Artem, one more question for you. I'm interested. Did you guys do any crowdfunding for yourself to get this thing going? Did you do a Reg A or a Reg CF or anything like that?
We have, yes. We did a small Reg CF offering for Farm Together Inc. on Seed Invest.
Oh, okay. Very nice. Well, it must have been successful to get to where you are right now because, like I said, I've been to your website. It's really interesting and everything. And
thank you.
I like the whole design and setup. It seems like a very easy thing to do. And again, everybody, that's at farmtogether.com is your website. How would someone, if you got a farmer on the podcast right now, who's listening to this, or an investor, how would they get in touch with you? What's the best way to do that? Email, website, or what? What do you think?
Either works. So on the website, you can email us at info@farmtogether.com, or there's a number below. We're still a small team, so we don't have like a call center or receptionist. So if you can't reach us, just leave a voicemail. We'll return your call 100% of the time. And then if you want to reach me personally, it's artem@farmtogether.com. So I'll spell it out, and it's not the easiest name. It's A as in Apple, R as in Romeo, T as in Tango, E as in Echo, M as in Michael, @farmtogether.com. And yeah, we reply to all emails, and whether you're an investor, you're a farmer, you're just someone who's passionate about the space and would like to work with us, we're hiring people as well across kind of the business line. So please reach out to us.
Okay, all right. And then lastly, I also noticed that you have an option if somebody wants to come in and take a whole project down for themselves. Is that the sole ownership? Is that what you call it? Is that still out there for some of your projects?
Yes, sir. Yeah, it's what we call a bespoke account, and some of our investors they would like to own a whole farm in their own name. They would like to own the title to the land. So we do facilitate that type of transaction as well, and we essentially become your own investment manager. We'll apply the same rigorous investment process, but this gives you more flexibility, more ability to structure it legally, tax-wise, how you want it. You have more control over, what's grown, how the farm is operated. Sometimes people want to buy a farm with a house, so they have kind of a bit of a retreat, a vacation property as well. So we help with that too. But focus is on still buying farmland as an investment.
So do you do any investing in rural opportunity zones?
So Vicky, when you mentioned you were in QOZ, I got really excited. We would love to do something there. I believe the legislation requires you to invest fairly heavily into development, and so we've been looking for opportunities in opportunity zones.
As with the blockchain, Artem, we can connect you with the opportunity zone people as well. Make your dreams
that would
come
be.
True. This podcast will make your dreams come true, Artem.
I know. It's just you're really touching on everything that we're doing. So I was really happy to connect for sure.
No, that sounds great. And I really enjoyed this podcast. It's a great topic, and like you said at the start of the podcast, on the very top of it, it's something that really a lot of people don't even know is out there. And to have what you guys have done and how far you've gotten so far, it's really it's a testament to you guys. You did a great job so far. And Artem, thank you so much for being a guest on the podcast today. It was great. I really liked this.
Thank you, Ron. Thank you, Vicky. I enjoyed it very much as well.
Yeah, and Vicky, you want to close out with any comment or a question for Artem, or should we just get out?
Well, I would say this, Artem, just because I like to have the last word, that there's nothing more exciting than farming, because you can invest in the future, you can invest in the land, you can invest in nature, and you can invest in your soul as contributing to the world and maintaining a food source to the survival of everybody. So what you're doing is very special, and I commend you.
Thank you, Vicky. Yeah, I really appreciate it. We whenever we have a tough day, we just remember kind of what we're doing, and it always comes back to that this is the most real, the most critical industry that we have to it. And so we're definitely honored, especially for us kind of younger folks, that some of the kind of the seasonal farmers have been very welcoming to us, very accepting, very innovative and receptive. So it's been great to share a bit more about our mission on your podcast, and hopefully we'll do more of this in the years to come.
Excellent.
We wish you very good luck.
Yeah, good luck on that. And everybody out there, you're listening to the Mappable USA podcast at mappableusa.com. Go to that website, scroll down. You'll see all our syndication sources. You pick the one you like best, subscribe, so you'll never miss another episode. And if you want to be a guest of the show like Artem was today, there's a guest tab there. Fill that out, and we'll see what we can do about getting you on the show. And that's about it. Another great podcast. Really enjoyed it. Everyone out there, thank you for subscribing. Thanks for your support. And we'll see you next week on another Mappable USA podcast. Have a great week, everyone.